Hi, we're back. It's a Wednesday afternoon, right around noon. We try to go live each week here on the Ohio Investors Facebook group page. This week, we are talking about paralysis by analysis. I see it every day. I've got people that call, they run the numbers, they look at every reason, every excuse. They have all this pain on why they can't get their first property. What are some of the reasons that you guys hear or see on a daily basis when people are trying to look at get into investment, but they just can't get over that hurdle? What are some of the pains that they suffer?
We'll go ahead and say the first thing is when we first meet with them, they have wrong expectations about the kind of returns they're going to receive.
Okay.
They expect to see these huge numbers, which the numbers are that the properties that we're bringing to, but not the huge numbers that they saw in some webinar
Right.
numbers. So first, once they start analyzing and truly analyzing properties, they get over that. But it takes a little bit of time first to get over that and understand that these are the going returns on the property.
Right. Anybody else? Is something that you see reoccurring over time?
Well, right now, given the uncertainty in the economy, that's what I'm hearing. Rising interest rates, looming recession. Are we in one? Are we going into one? Just a lot of uncertainty, and I've had a couple tell me that they're going to hold off, and some that are, they're trying to change their price points, and they're just not sure what to do. Okay. So I don't think a lot of that. Sometimes I think some of that might be just an excuse, a little bit,
Sure.
Just because they do. It's just one thing to continue to put it off. Not that it's not a valid point. It certainly is, but that's what I'm hearing a lot about right now.
So those two things we're talking about, like kind of high level things. I'm looking like if I were to ask an investor, what are you afraid of? And they may say some high level things, but really when you break it down, what are the numbers or the statistics that they're running that they're afraid of? One of the things I wrote down was insurance. They don't know what insurance rates are on properties, so they're fearful of, am I putting the right number in there? What if it's too low? What if I'm not getting the returns I'm supposed to be? But the reality is you should have an insurance agent on your team that could quote you some numbers. There's many websites out there. If you plug an address in, it will tell you approximately what they're going to be paying in insurance. So we got insurance. We also have rents. They're afraid of, are my rents that I'm using to calculate my returns, are they accurate? Again, there are all kinds of websites out there that pull from comparables, and you can really do deep dives into a property and see what the rents are. Taxes. What are my taxes going to be on this property? Again, there's websites out there that can provide all of this information to you, but they just overthink it over and over again, questioning themselves.
Oh, there you just hit on the point. I don't necessarily see what you're seeing, but I do see the overthinking. Because by the time we analyze the property form, we're breaking it down pretty darn well.
Sure.
They're getting good insight into the property, but then they're overthinking. Oh, well, you know what? What if, I want to have a roof inspector take a drive-by before I put an offer in, and then they end up losing the house to somebody who's not even doing inspections because the house is solid. Not that I'm recommending don't do inspections, but I'm saying you're delaying because you're so worried about buying a land that when we're out there looking out for your best interest. That I might see as one of the issues.
Yeah. So we got that. We've got payment, which a lot of times people just don't know how to calculate. They can't figure out what would my payment be on this property, including taxes, insurance, things like that. They don't know how to run a simple calculator or something. But again, there's a ton of apps out there that if you plug in a purchase price, a down payment, interest rate, and a term, you're going to get what your payment is. I mean, it's super simple, and you don't have to overthink it. You just got to know where to go get that information from. So we've got insurance, rents, taxes, payment, location. What do you guys hear on that? What are the excuses, that people talk about when it comes to location?
I think sometimes.
Oh, go ahead, Corey.
I was gonna say sometimes they think they're comfortable with the numbers for like a certain area, but then they choose like a totally different area and like, you know, put the same numbers in, and then we provide our feedback, and it's like, well, you know, this is not going to provide the same rents. So I think sometimes not actually like dive in deep enough, like to understand, like, you know, Youngstown and Cleveland are two different areas. So like, I think doing that research, oftentimes they need to, you know, to make sure they're comparing apples to apples and not necessarily like just, you know, jumping outside of, you know, one scope.
So again, if it comes to location, there's all kinds of demographic websites that you can go to that will tell you crime rates, average incomes, population. It'll give you all the information that you need to know about a location. How about vacancy? What are the fears with vacancy? Richard, what do you hear with vacancy?
You mean like, are they worried that they're going to have vacancy, or they're not going to keep tenants?
Yeah, I mean,
Sure.
When we run our numbers and we use our spreadsheets, we put in a vacancy factor. Most people think in worst case scenario terms, and they want to think, what if I didn't have it rented for the entire year? What would happen?
Right. Yeah.
Does that ever happen?
Yeah. Right. You know, I was going to mention property management, which is certainly, you know, one.
And
you know, finding a good one, and then being able to afford it. What do they charge? Is it 8%? Is it 12%? But then that sort of segues into vacancy. You know, especially for out of town investors, right? We try to give them several names. They can contact people. They can interview, and they should. They're prospective property managers, right? And they may, you know, even though the property may be vacant or maybe one vacancy, let's just take a duplex, for instance, doesn't mean that you know, you should pass up on that property. I mean, you can get a tenant in there, and you have to factor in that 5-ish% of vacancy, because it's going to happen perhaps over time. So I do hear that, you know, quite a bit.
Okay.
To your point.
Property management.
Yeah, we still have no shortage of tenants that want to rent. By far, we have no shortage.
Absolutely.
Transition into what
Although
you said.
you'll hear about it in other parts of the country, and that could be part of the fears for people too, is they're reading the national news and not looking at the local economic patterns.
Nice. Yes, absolutely. So you brought up property management. If I'm a property manager, I have constant phone calls coming in looking for rentals. If I can't I can only put one person in each rental. So I have this long list of people that are looking for rentals that I can plug into other places. So if you're looking to self-manage, it's a little more difficult because your list may not be as long. But if you're a property manager, you may have a long list of people that you can plug and play into these other properties, and the vacancy factor goes way down by using that property manager. So thanks for bringing that up, Richard. That's definitely one of the things that we get into. Emotions. Just you're putting emotions into this, and you're making a business decision. We bring emotions in just like we would if we were buying our own house and looking at the property. I've had people talk about like move this wall and open this up and do that on a rental property that's already producing money, and what they're doing is going to produce no more money. So they're putting emotions into like, if I lived here, here's what I would do, versus, hey, here's what the rents are for this area and what it can make. And looking at the data. I mean, you've got data. We've never lived in a time where data is so easily accessible. You can pull all of this information in and easily get there. But the reality of this, all these pains that we're talking about, everybody goes back to on their first properties. What is the worst case scenario? Let's paint that picture. What if you're buying your first investment property, how do you look at, like, what's the worst case scenario to you? Put yourself in a buyer's shoes.
I guess worst case scenario would be inheriting tenants that are already not paying, or inheriting tenants that all of a sudden aren't paying, and I've got to go through my first eviction.
Okay. What else?
Not understanding like how to handle that transfer. So like you mentioned self-managing versus like, you know, having a property manager. Like, yeah, there's a cost to having a property manager, but sometimes that cost in having that assistance, especially on the first one, will be worth its cost to be able to get in and get the first one rolling before taking on additional ones.
If I'm a buyer and I'm sitting there trying to plan out the worst case scenario, and I'm thinking, okay, what if these people didn't buy? What would happen to, or what if they didn't rent? What would happen to me? If I know the numbers and I know how much my payment is, and I've got these reserves sitting over here, I know how long I can make that property float before I have to unload it, or I bring somebody in. So one of the solutions on these things is numbers solve everything. So that first property is the most painful because, especially if you're buying a single family residence, if it's vacant, you lost 100% of your rent for that month. Doesn't mean you lost it for the entire year, because that's what most people do, is think, what if it didn't rent for the year? Let's not go for a year. Let's talk month by month what would happen, because those are a little more bite-sized chunks that you can process. But at some point, you got to have an exit strategy. You got to be able to say, okay, if this property isn't working, I could exit, and this is when I would do it, how I would do it. But if we come back to understanding the numbers and things like that, if my payment is X and I've got one property, well, I've got to cover that whole thing. But if I get a fourplex, or I have 4 individual units, all of a sudden these other properties are covering 75% of what that one unit vacancy is. It may cover it all together. So if one of my units vacant, it's not a big deal. I'm still breaking even. If I've got one other property, now I'm 50% vacant. Well, now, these other 2 properties are paying so much, but I'm only paying so much too. So I can last in a down market much more easily if I have multiple properties. But this is why buying your first property is so scary, is because it's 100%, especially if you're buying single family residence. But once you get over the hurdle of buying that first property, now all of a sudden the other properties help you to sustain if something goes wrong with this property. And it falls into that worst case scenario, the sky is falling, Chicken Little type situation, where you're thinking everything's going to fall apart. But once you get the first one, it starts to pan out and it becomes so much easier. So let's talk exit strategy. You're trying to get out of a property that's just a failure. When should you do that? Why should you do it? Should you get out of it completely, or is there another solution?
We got a good example of that. We had a bigger pocket client come to us that already bought a house with another realtor. They came to us to sell their house, okay, because they had just bought it. They had to throw some money into it for some expenses that they didn't catch earlier, and they were having trouble with their property management company, and they just thought they were going to lose their shirt on it. I went and I checked out the property. We talked over what expenses they've already performed on the property. And I said, why don't you guys hang on to this for 4 or 5 months? If you want to change property management companies, change property management companies. But you've already spent any money you need to spend on this property. Let's see what happens. So now that here we are almost 8 months later, and they're actually happy.
Awesome.
But they were going to exit when it was a bad move to exit.
So I think the solution that you're talking about to the pains that need to be addressed is hiring a team, whether it's your realtor, your property manager, your insurance agent, looking for the right people to bring onto your bus and interviewing them, making sure that they have the same goals, or adjusting your goals to their strategy if they're more experienced than what you may be to be successful in this.
We're probably the only real estate group out there that are telling our clients, listen, we're going to talk you out of more properties than we're going to talk you into, because we want them to make good choices.
Right. Yeah. I mean, it saves us a lot of time and energy to look at the right properties versus chasing after fictitious numbers that we know that exist out there when you're looking in the wrong areas. So I guess the last thing that I want to bring up in this is goals. If you have goals, or you have a business plan of how you want to get properties, whether it be 3 properties this year or 40 properties over the course of 30 years, what are your goals and how do you understand them? Because most people try to buy their first property and they don't look at it as a base hit or even a little bunt. They're always looking for a home run. They want numbers that are astronomical, that they feel like they could retire from work and easily be able to survive off of that one property, and everything's going to be great. Does that ever happen to you guys?
Yes. Yes.
It does? You bought one property and they survive off of that?
Oh, I'm sorry. I thought you meant, do I ever have people that are just looking for that
Okay.
home run?
Have the conversation.
You answered the same question, just in a different perspective. So yes, you have that happen all the time where it's home run. I want a home run, or I'm not going to buy anything. The reality is if you watch any of the podcasts or you go online and you're looking at investors, most of them will tell you that your first property is a learning experience. Whether it's good or it's bad, it's the best move you can make to move down the path of becoming a property investor, because you're able to work through some of the challenges in real life versus constantly running scenarios and thinking, what if I did this or what if I did that? You're actually doing it and learning by doing that. You're going to fail. That's the bottom line. People fail on different properties. Maybe if it's not on your first, it might be on your third, but you will learn so much from that failure. Whether you look at a failure as, oh my goodness, I lost $40,000 on the property, or you look at a failure as, I had a vacancy for 2 months and I had to sell it. Because really that's what happens. Is most people, they don't lose huge dollars on these things. They lose a couple months and they panic and they get out of it, versus having a team of people that say, all right, let's regroup, reorganize, and reapproach the same property, just like Frank talked about a minute ago. Selling is kind of the worst case scenario because you're getting out of it completely, but have a team that will tell you, hey, this is the right time to sell, or let's do this so that we fix the problem and we can get people back in there. Anything else you guys want to throw out there from this paralysis by analysis perspective that you're running into on a daily basis?
I just wanted to say one last thing with respect to goals, Blaise. That's why I think it's important to have these conversations with investors. Like, what are your, we know what you're looking for now, but what are your long-term goals? Meaning, are you looking for a property? Are you looking for a portfolio? Are you doing this for retirement that's 30 years down the road? Are you doing it because you have a couple kids and you want to get them into college and you've got 15 years time? You want to get a vacation house in Florida? To have those personal conversations. And I think the investors I talk to, they really like that, because you're taking it's a personal approach. They know that you're taking an interest in them, and therefore you're going to look for the property that's going to help them get there. They might have that failure, so you've got to have that conversation too. But if if you know that, hey, I'm looking for, someone's looking for 5 properties in the next year because they want to add it to the portfolio and they got retirement, then I think that they're better able to even come up with the exit strategies that we talked about too. I mean, those are important to think about. And like you said, it should be all part of that business plan. It is a business that they're operating. And so if they don't have a plan, if they don't know what their jump off point is, what their exit strategy is, they'll never attain their goals. So I think that's why I think we do a good job in terms of really getting to know these folks and, take their interest to heart.
Yeah. I mean, if I have a whole bunch of base hits in my portfolio, I'm much more likely to be a success than trying to constantly find that home run, because the home runs, they're out there, don't get me wrong, but they're few and far between. And normally the experienced agents that don't get caught up in the paralysis by analysis, they grab them as soon as they hit the market because they're ready. They don't need to run these numbers. They already own 20, 30 properties. And when they say a good deal, they're on it because they know if they're not, they'll lose it. Where the guys that are just getting into this and they're constantly running, does this work? Oh man, this one looks really great. Is it too good to be true? By the time they have run the numbers for 3 days and make their decision, that property's gone. It's already being inspected and ready to close with somebody else. You got to be able to run your numbers quickly, or have somebody on your team that can help you run those numbers quickly. Mike and I were going over just calculations and stuff this morning. Just simply understanding the numbers and saying $10,000 based on this interest rates equates to this much per month. Because how many times do we get caught up in a negotiation where somebody I'm not buying that property because they're asking $2,500 more than what I want to spend. $2,500 sounds like a whole lot. But if I run the calculations here real quick and I write $2,500 as my loan amount over a 30-year loan, and I put in a 6.875 interest rate, that payment comes out to be $16. Are we seriously going to give up a good property over $16 a month? Or are we going to give up that property over $2,500 a month? It's the exact same thing. It's the exact same thing. And if you're a good landlord and you become a good investor by experience, you understand raise rents over time, adjust things, and all of a sudden these properties that maybe only base hits in year one, they're home runs in year number 5 because you systematically raise rents according to the appreciation that we're seeing in our areas. And all of a sudden, year 5, you're not looking at a 6% return. You're looking at a 15% return, sometimes a 20% return. You guys run these numbers every day, and you see what it looks like in year 5 if they do it right. Correct?
Yeah.
So bottom line is, paralysis by analysis is just that. You can look at a property over and over and over again and try to find a reason why not to buy it. And there are many reasons why not to buy a property, but most of them live in your head and they're not on the paper in front of you. So guys, I appreciate you joining me today, and we're going to end this live, and happy Thanksgiving to everybody.